If you can't dance, you're going to jail. Other things of interest out here, the election in Brazil over the weekend basically did not have enough votes for a single individual, so we're going to have kind of the right of left candidate and the far left Molotov cocktail throwing president that they have now in Brazil. She said that if she got elected this time, she would throw more Molotov cocktails at the filthy pig dog capitalist. And what else can you say? That's well, you've got at least a more centrist candidate that got enough votes that they're going to continue. And nice pop in things like PBR, Pabst Blue Ribbon, and, of course, Petrobras, which is the real symbol for PBR. Now, we're going to get into the teachable moments. And the teachable moment right now is, of course, GTAT. I had several people call about it. I had warned everybody, and I hadn't warned them about the possibility of them going bankrupt. I really didn't and couldn't see what had happened and what they'd done in their finances. It was fairly unclear, and I think why so many people got caught unfooted here. If you're not familiar with GTAT, they were the company that makes silicon ingots and ovens to make silicon ingots for solar companies, that kind of stuff. And when we get into this, remember, there's going to be a lot of cast-off. Besides Apple trying to use them as the new screen material, which they dropped, Apple basically signed a lot of contracts to these people, and my guess is that they all got reneged on. But GTAT, of course, was printing about $10 on Friday, printing $1.80, $1.90 or something this morning. They filed for bankruptcy, and the question is if it's worth anything at all on that $1.80. My guess is it probably is not. Now, what happened is in the last 2 weeks before the product was ready to be put together and shipped out the door at Apple, they decided not to use the sapphire display glass in all the Apple iPhone products. Well, Apple pretty much made a huge commitment to these guys that they were going to be helping them get out at least the first versions of these. Apple bought one of their old factories. Apple basically bought $600 or $700 million worth of their ovens, and you know, pretty much an implied commitment out here. I bet there's going to be a lawsuit on this deal from the shareholders of GTAT, at least the equity shareholders. I don't know if it'll ever come to anything, but basically one of the most important things, and one of the reasons I talked to people, I can't remember who it was. I know it was one of our fine lady listeners, and I had warned them about GTAT because there was nobody that could really step in behind Apple and buy the same amount of ovens or buy the same amount of displays, crystal displays. And that becomes the problem when you have a single customer and they have a spigot or a light switch where they can turn things on or off. And it makes me think of what J. Paul Getty said. J. Paul Getty said, if you own the bank $100, that's a problem. If you own the bank $100 million, that's the bank's problem. And that's exactly the issue that these small vendors, when they get involved with somebody like Apple, are. Same thing with Walmart. What if they don't pay you for 3 months? Will your company go bankrupt? These big contracts are heaven and hell for a small manufacturer that adds value to somebody like Apple, and we're seeing what can happen. Anyway, I warned because I didn't think there was anybody that could replace Apple. I didn't know Apple would just tail and run. We'll talk a little bit more about this when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, one of the things that you have to look at when you're playing an equity is what are the risks out there. And the risk for any business I try to stay away from, if it is the revolver or Russian roulette risk, which is you don't know how many chambers are in the gun, but if you do pull the trigger, you're going to blow your brains out instantly. And that's pretty much why I stay away from biotech stocks. You never know when the next big lawsuit comes out or something comes out and someone says your drug causes cancer, but it's almost always one particular thing. Happens a lot more in biotechs than it happens in technology, We kind of had a forewarning, although Apple's been saying they're going to use the Sapphire screen in a later version of this. The question is, what happens now that Apple doesn't have this company really to do much with? Do they step in and buy them? Be a smart business move, but also would look rather predatory, especially since this company owes Apple about $600 million in a prepayment for all the work they were going to do for them over the next 3 years. That's why they're claiming bankruptcy, by the way. They have to pay the $600 million, and the company that lent them the $600 million doesn't want their product, and they're the only ones that could buy it. So Apple kind of had to know going in that they were going to bankrupt this company. Kind of tough to tell. Anyway, beware of companies or people that own the bank and not people that owe the bank. I'd rather have a company with 1,000 customers or 100,000 customers that made smaller margins than one that made huge margins but had one customer. And I can tell you from being in the business I was in, you had a handful of people like Comcast and Time Warner and CNN, and they took up 90% of your business, and the other 10% was made up by thousands of people that made you no money. And you were always in heaven and hell. They were always sticking it to you to try to get a better deal. You're better off with a varied but slightly less profit margin customer base than you are with a single one or a single product, kind of like the one-legged stool. What else is going on out here? We've got a lot of earnings coming up, and I think a lot of the back and forth and the wildness of the market's going to continue on. After the bell tomorrow night, we've got Yum Brands. On Wednesday, before the bell, we've got Costco and Monsanto. Then we're really going to start getting into it on Tuesday before the bell next week. Citigroup, Johnson & Johnson, CSX, and Intel, those two after the bell. On Wednesday, Dunkin' Brands, Travel Zoo, Forest Products, and after the bell, American Express, Las Vegas Sands, Netflix, and United Rentals. Thursday, we've got Google, Capital One, and SanDisk. And the next week, there were too many of them to list. So we're getting into the warm-up phase next week, and look for yet another Super Bowl of earnings. It seems like they'll never stop now. I think we had about 2 weeks or 3 weeks of rest, and then we're right back into earnings cycle. Especially a lot of these new IPOs will be reporting outside the normal reporting window of the S&P 500. And we're going to see more and more of this almost daily, especially with the massive amount of IPOs that we've seen over the last probably 9 months. Double what we did the year before, and this year is still going. As I talk about when Alcoa mattered. Sounds like a good title for a book, doesn't it? And it is that, but we are going to be pretty much going through these over the next few weeks. But again, everybody already knows. If you export a lot, if you're Dunkin' Brands, you're importing, maybe your costs go down on coffee. If you're American Express, probably doesn't bother you either way. Las Vegas Sands, you're not going to have a lot of people leaving for Macau from the United States. Maybe the exchange rate makes it a little bit better to make it over there. Netflix probably doesn't do anything to you. But if you're J&J, you export a huge amount of products overseas. It matters. If you're Intel, you export a huge amount of products overseas. If you're Costco, you import a lot of stuff. Maybe those prices go up or go down. Maybe it's a little better for you. My guess, though, is for the most of these, it's going to be a negative because it was such a positive while the dollar index was low. We'll be back in just a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back, and 1968 on the S&P cash, basically flat, 2.27 billion shares on the New York Consolidated Tape. And I was going to say, we've seen some stuff out here, and there's some, maybe some tiny bright spots out here. There were a bunch of Gartley patterns starting to show up in the Art of the Chart scan over the weekend, and pretty much preliminary out here. When I went to my newsletter this morning, if you got my daily newsletter, the Path of Least Resistance, a few more out here that I thought was interesting. So I thought maybe we're going to get at least a little bit of a pop in some of these, and I'm trying to remember what they were, GSS, but really not. You needed to close back in the range, and I didn't play any of these, but I mean, certainly if you would just look at the chart, they would be okay. Now, the problem continues to be that 10 or 15 buck bounce in gold is not going to save these companies. They'll be following the ways of GTAT if gold doesn't go up here fairly soon. And that is the problem out here. Do these guys have to go to the well again? We've had pretty much a 3-month move in the dollar, and that's brought down gold, of course, down to these levels. Can they make any money or enough money to stay open? And it is going to be problematic at best. But a lot of these companies down at previous lows and, lighter volume. But are these things really bouncing? And again, I can point to the Russell, the same thing. I think it was flat. Earlier today when we started, all the other indexes were up. But the Russell couldn't move. And that continues to be the problem. Very, very narrow leadership in this market, and even the stocks that should be bouncing, even the gold stocks, not really seeing a lot of movement out here. You'd need to close on something like Nova Gold above $2.91 from that May 28th low that had 3.5 million shares. Now, did you have lighter volume on Friday? You certainly did. You got a little doji out here today. Maybe these things come back in the trading range. I still suspect that what I'm looking for is probably a 90-point move down in gold. Maybe it happens over a couple of days and washes everybody out. But to me, it still looks like a commodity that is looking and ripe for a washout to kill off a lot of people. And I'm going to stay clear of it, even though there are some very nice signals out here in this market, and I'm showing them mostly because I'm not going to play them. Golden Star Resources, like I said, 5 million shares from the December 20th low, 39 cents, 5 million shares. You get into that on Friday with 2.1 million shares. So if you are bullish on gold, there are some things. But again, this is what I dislike about gold. And that is, let's zoom into this a little bit so you can get a better idea. You had to move down in GSS from the April 10th high at 74 cents down to the May 28th low at 46 cents. Now, your bounce should have come on more energy, and the answer is it did. So your B2C of an ABC down comes on more energy, but basically the same energy all the way back down, broke through the 46 cent level. You did it on volume. Now you're back down to these previous lows where we're going back to, of course, the December 2013 lows. And, of course, lighter volume. So if these things really don't get out of the way fairly soon, the question is more of a fundamental one than a technical one. And that is, how long can these companies stay in business with low gold prices, relatively low gold prices? And I think that's probably a question better answered by Tom O'Brien, since he spends a lot of time on gold. We talked a little bit about Rheingold. And according to him, they don't hedge, and they get paid as long as anybody is digging out gold out of the ground. What can you say about that? Not a bad business. Now, if they stop digging gold out of the ground, maybe that's where GOLD sees an issue. But I digress. So anyway, or what was it? It was another stock that we were looking at on Friday. I do not know or remember. Anyway, you can always give me a call at 877-927-6648. Or you can post a message in the den, or you can email me at path@tfnn.com. What else do we have going on here? A lot of other stocks moving in this market, and some of these things should be bouncing on volume. One that is not, and again, I suspect this is because of the upcoming elections, also the risk from the Supreme Court that they throw out in total lockstep the Unaffordable Care Act, or the Affordable Care Act, depending on which side of the political fence you sit. But basically what I'm looking at is a break on volume for WebMD. And if you go back to the last gap up, did it have a good gap up with 3.8 million shares? Yes. But it came back down, and the energy didn't really drop. It went through, filled the gap, pretty much destroyed it, made yet another gap down in doing it. And normally the best you can hope for is sideways action for a while, and maybe it consolidates out. Unfortunately, when I think you take a bigger picture look at this, there's probably a better than 50-50 chance this thing makes its runs down to about the $30 level. So keep an eye on that. Other stocks of interest, Italy's share. There's a lot of discussions about whether or not they're going to allow a lot of these companies out here, or countries in Europe, to renege on their deal, including Italy and Greece and some of these other smaller countries, the southern countries, as they like to call them. Again, you've got very light volume out here down at these lows, and these actually look a little better. So the question is the Marshall Plan for Europe, and Europe's Marshall Plan, going to allow Greece and Italy and a lot of these countries to skip out on their debts? Now, if you looked at the chart right now, you would say yes. I just don't know politically if you could do it. They may try. Very tough for me to see. If you look at the EWI, which is the Italy Index Fund, on August 7th, $15.05, 30 million shares. We get into that on Thursday with 3.6 million shares. You have 2.3 million shares on Friday. Today, 1.5 million shares. It's up a little, but not much. I'd be watching a lot of these. This is not a bad-looking chart out here, and I would say that maybe just the mention of a Marshall Plan for the southern non-producing countries, Italy, Greece, certainly not Germany in the way we think of them, will be interesting. Some of these other stocks could look like they could make a bounce, but again, we went through so many of them last week that I don't want to belabor the point, but there are some testing with lighter volume, and but again, not getting a lot of love out here today. The Juniper Networks JNPR previous low was July 23rd, $21.97, 40 million shares. This thing's been toying around that particular low, went to $21.61 with 7 million shares, popped with 2.7 million shares, though, on Friday, and 1.9 million shares today. So a lot of these, I think, especially these non-100 of the S&P 500, the top 9 stocks in the NASDAQ and the top 10 stocks in the Dow, are getting all the love, where we have a lot of these other stocks that have no volume at the lows, but are not finding a lot of people running to catch them. Let's see if we have anything. The gold producers that go out of business, the more precious the ones will be left. Well, certainly you could consider that if they don't go out of business also. That's the problem. How much money do these companies have? How much do they have to dilute their shares? And a diluted share, what is it worth in the future? These guys are so poorly managed that it doesn't matter. I mean, if you're a great manager, you don't go to work for a gold company. You go run Hewlett-Packard or something, right? Anyway, Nordic American Tankers, and I was interested in the way this one would react today. We watch around TFNN, especially in Tiger's Den, these shipper companies. Energy wasn't all that exciting on the way back down, but we're basically toying around with this May 9th low at $8.01 that had 2.2 million shares. And, of course, we've gotten into it for some very light volume out here. My theory, though, is that the Fed is thinking about raising rates. They have been totally non-vocal, and at this point, I think you almost have to have them say that they're going to do QE4 to save this market. So I'm not highly bullish, to say the least. It would take some kind of huge big movement out here to really bring anything out. And again, these stocks normally across the last couple of years testing lows on lighter volume would have bounced on the first day, wouldn't take in 3 days, and now we've got a lot of stocks out here on 3 days still not bouncing. National Bank of Greece, NBG is the symbol on it, $2.90, 28 million shares on the May 15th low out here. We've gone below it, but we're still hanging below it on lighter volume. Of course, you got into it on Thursday with 8 million shares. You had 3.4 million shares on Friday, 2.9 million shares. So there's some stocks out here that could make some nice bottom moves, but kind of tough. Paramount Gold and Silver. Probably don't hear a lot about this one out here, but certainly some of these making at least usable lows. If we could see a real move in gold that would make these things not go bankrupt. So, real lottery tickets out here. PZG on this one. I don't know a lot about it. Again, I don't play a lot of these miners. But 78 cents on the low from January 10th, 2.1 million shares. Of course, on Friday, you had 747,000 shares. Today, 562,000 shares on a doji. On a pattern basis, not a bad-looking stock for an 80-cent stock. Reliance Steel and Aluminum Company. Another one out here kind of at the low end of what looks like a big trading range. What you don't like about this is all the energy that came in on this last leg down where it came up, touched the gap on September 19th at 73.96. And it's been a one-way ride down here to the lows. Now, volume did kind of peter out here at these lows, but you certainly need to close above 66.28. And I suspect that the best you can do is think about a trading range, maybe back up to 74 in this particular one. Swift Energy. You've got a few of these companies out here that people have been ignoring and look like that they are bottoming in this energy sector. As a safety play, these things look like they're getting ready to come back in. That is the $8.80 low from February 27th. 10 million shares as it spiked down, went up, filled the gap over that time. The last few days has been coming back to test that high volume low, as it should. Last 3 days, 2.8 million shares, 1.5 million shares on Friday, 1.4 million shares so far today. But it looked like it is back in the trading range, and not a bad trading range it is. If you could get just back up to the last previous high, which would be 1249, not a bad trading range. So there's some stocks out here that look safer than others. Stillwater Mining, we talked about the miners out here. Not the most horrible of charts, but again, this thing is at the precipice, and a huge move down in gold would probably take this stock back to the $10 level, $10.50. You got a couple of lows back down in here in November of 2013, you basically were at the last level of support for March 27th, 2014 at $14.18. It had 4 million shares that day, and we've pierced below it. Question is, what is the 14.17? We're right at that level now, so you might want to keep an eye on SWC as one of these stocks that looks like maybe gold miners have at least bottomed for the moment, if not bottomed in a B to C move. I still think that there are more and bigger downsides to come. I'd like to see probably about 11.10, 11.20 on gold, and a huge washout, and these stocks get back down to these November 21st, 2013 lows in many of them. Teva Pharmaceuticals. Been kind of watching some of these out here, starting to see a little bit more weakness in these. Of course, in the IBB, this thing got up to 277 today, trading out at 272 now. Is there any energy on the upside to these? Not a lot right now. But one of the ones kind of moving back today. We'll be back in a minute. Give me a call at 877-927-6648.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, over the weekend, I got one thing to say, and that is, if you're Dan Quayle, you're probably the happiest guy in the world. My God, is there a guy that can put his foot in his mouth more than Joe Biden? And as a loyal American, all I can ask is that we put him in witness relocation so they can't say one more word. My word. I think that's going to be a new thing. Can you apologize more than Joe Biden? But I digress. But I think anybody that's ever made a political gaffe or said something they shouldn't, probably all rejoicing quietly today, knowing that Joe Biden can't get in and apologize any more than he can. Basically turning people against us all over the world. Anyway, it is going to be an interesting few days out here. I got a few, we were talking about TIVA out here. And what I really wanted to point out was this April 2nd high, $54.70, 11 million shares. That is fairly interesting in the fact that, of course, it tried to go through that on July 24th with 6.2 million shares. Pretty much got the same attempt on October 3rd. We are coming back today, light volume out here. What you don't like to see if you think that these things are going to roll over is that they hang out at these highs very long. I think you can pretty much even say that with a light volume, you didn't hang out at that high for more than a little bit. It looks like you're going to need 11 million shares to worry about it. So if you're thinking about the IBB out here, I think maybe it has a few more days to go. Maybe we're going to have to get into that earnings next week for it. Apple is going to have a big deal on October the 16th to roll out their new iPads. For me, probably a non-event for the price of the stock. It looks like almost nobody is wanting to buy iPads anymore. They're all looking at buying the i6 Plus, and it looks to me like Apple probably rightly is cannibalizing that tablet market. They make a great deal more money selling an iPhone than they do a tablet. They have to sell 4 tablets to make what they make on one iPhone. So more power to them, but they're going to bring out some new ones with high-res screens that are going to match pretty much what the Android high-end ones do here in the next few weeks. Even then, look for the PR engine on this thing a couple of days in advance because, of course, the media is such Apple homers. Try to think what else I wanted to look at. NFLX, some of these other high flyers out here. Looks to me like we're probably getting into an area on Netflix that you would want to watch this for some movement to the downside. This thing is right up against the long-term 25 by 5 displaced moving average. I do kind of like this in the fact that you want to see these things, for the most part, break these levels with fairly decent strength. And I think, let's go back here and look at a slightly different one. Do I have time? Yes, I do. What you don't, or what you could worry about is the next time this thing closes under the 3x3 or a 9-day moving average, you'd really need to watch out. This is a pattern where it goes under above it for a number of days, below it from a number of days. So keep an eye on Netflix out here for any weakness that would close below the 9-day moving average. That would be a signal, I suspect, to sell it if you're long, and consider short if the volume continues to be light out here. You've got one sell signal already. This thing's got a lot of shorts in it, so I think you're going to get a second. We'll see you tomorrow, same bat channel, same bat time. So when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.